The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Tom O'Brien and Steve Rhodes.
Welcome, folks, to the Nadex Bull Bear session. Tom can't be here with you, so I'm going to be here with the full hour. And thanks so much for joining us. And I'm going to be both a bull and a bear today. You got the Dow off 163 points, S&P's off 20, composite off 43, small caps off 13. And you can give us a call, folks, 877, or you can give me a call, 877-927-6648. And what I'm going to first do is we had a caller on the line on the show that I did before this. That is the Trader's Edge. If you haven't caught that show, you can tune in at 9 o'clock, or you can get the archive of those shows on Channel 9. The archive of this show is on Channel 10 on Tiger TV. You can also watch us live. Just go to the homepage of TFNN.com, click on the Tiger TV button, and voila, you'll be taking a look at the charts with me, or we can take a look at a specific chart of something that you want to take a look at. And we're going to go back to Michael in Daytona Beach, who has been kind enough to hold through that long break. And Michael was just simply talking about the Bradley model, some lunar stuff, taking a look at the Dow. So I do have the Dow daily chart up on my screen. Michael, are you still there?
Yes, I am, Steve.
Thank you so much for holding. Now, of course, folks, I talk about you talk about how things go up and yet things can fall faster than they go up. Okay, so I don't know if I said that right, but the bottom line, we take a look at the markets. My experience is that things can fall faster than they go up. And a perfect example is the Dow, which Mike was brought up and he was talking about. And so you folks may not know this, so I'll throw this out there to you. And the Dow closed December 30th. December 30th closed at 217.56. Michael, when you were calling, the Dow was taking back 100% of those gains. And it did that. Now, those gains, I'm talking about, it closed on December 30th at that price point. It made its high, made a peak on May 1st. So it took 5 months to go ahead. 5 months, so May 1st, so it was really, 4 months? 4 full months on the ride up and 1 full month on the ride down. What do you think of that?
Faster on the way down.
Yeah, absolutely. And if some of these support areas here don't hold, you know how when you ever ride any roller coasters?
Oh, yeah. I used to drive race cars.
Oh, you did?
Yes, sir.
Oh, good for you. Is that why you live in Daytona?
No, well, kind of. I did it many years of my life, and I used to be a race car builder.
Oh, that's...
And believe it or not, Steve, I've been a follower of Tom since 2002.
Yes.
And when I started to learn Tom's methods, I called in one day and I said, Tom, using all the calculations that we use for market analysis, I said, I've done this already with race car chassis analysis. Everything just seemed to cross over.
Isn't that cool?
Yeah.
Yeah, no, it absolutely does. For 1 year, my best friend, it was for his 50th, and it wasn't his 50th, maybe it was, but I got him the Richard Petty School up at Daytona on the racetrack up there.
Right.
And John has always been a, fast car, had all kinds of hot rod cars. And, and the experiences that he actually had in Vietnam, this is a person that you would think would walk around without fear. And pretty much he does. And he certainly just tells it like it is, especially after those experiences that he had over there. So I thought that it would be great for me to buy him that gift, which was the full Monty, which he was going around the track a number of times, several opportunities to do that. And before he went ahead and drove the car himself, he went ahead and sat in the passenger seat and let one of the other drivers take him around the track.
Right.
When he got after that ride, he got out of there, he came to me, he said, I don't know if I want to do this. Now, at first I thought he was kidding. And he said, no, I'm serious. I don't know if I want to do this. Now, maybe you can kind of picture this. He's sitting in the passenger seat, so what do you think he's looking at on the trip around there? He's looking at the wall. and they're so close to the wall, he is saying, I think I'm going to run into the wall. And to me, life is really all about focus. Whatever you focus on is going to take in that direction. And what was so cool was that in the pregame, piece of the driving experience, they came and they said, all we want you to do is focus on the rear end of the driver that you're following. And he did it. He had one of the best times of his life.
Yeah.
In fact, he's working on a new project, and he's had some really great success here as of late. And so the whole thing that goes full circle, because that's in essence a little bit about what you were talking about. He was up. One of his clients is going to be Richard Petty's group. And cool. he went up to meet with them, I think it was in North Carolina or somewhere, wherever their headquarters is at, and he brought with him the certificate, the pictures, the whole thing, about what he did around the track. So that's a cool thing. So that's cool that you drove fast cars. Did you watch the Indy 500 this weekend?
Oh yeah, absolutely, yeah.
Man, it's incredible how they've been able to create so much safety now. And they continue to work on it each day, but it seems like it gets safer and safer, especially to take care of some of those nasty crashes.
Yeah, a lot of it is the technology that goes into the chassis building as far as the structural, strengths of a lot of the materials that are now designed to conform and, destruct on impact so that it absorbs energy.
Yeah.
And a lot of the crashes that you see, like even with stock cars, the ones that look the most terrifying are usually, the driver comes out with the least amount of injuries because as the car is crashing, it's deforming.
Yeah.
And it's the parts that are designed to collapse are collapsing, absorbing the energy.
Yeah, so it's pretty cool. And you think that because of the technology that they put into that, all those things end up transcribing or transforming over into just normal vehicles.
Absolutely. A lot of the newer cars, a lot of the newer designs have taken a lot of the ideas and things that have been developed through racing, and they are applied into passenger cars now.
Yeah. So you called and you're talking about the Bradley model, and the Bradley model is taking into account a number of lunar aspects, astro aspects, a number of things that are out there, which is why the Bradley model, can go out from here to infinity, because you already have all of this information, in the screens. The data's already there. It's just a matter of being able to, draw the charts out there. So when you take a look at about, let's say, sacred geometry, the summation index, Fibonacci. It exists in so many things in life.
Mm-hmm.
Like you're talking about. Just take a look at the human body. And the summation index, folks, if you don't know how that actually works, you're basically start off with the number 1, add number 1 to it, and that would be 2. And then you just you take that sum and you add that sum to the previous number. So it'd be 2 plus 1 is 3. And then you'd have 3 plus 2 is 5. Right? And then 5 plus 3 is 8. And 8 plus 5 is 13. And 13 plus 8 is 21. And if you just keep doing that, what you will see is that when you take those numbers, if you divide the first number, if you divide, let's see, 21 by, what did I say? It's 21 by 15. I'd have to go do the actual numbers. But what will happen, folks, when you take those set of numbers and you divide the preceding one by the post number, you'll get 1.618, and vice versa, you'll get 618. So, and if you just keep doing that, I'll put a chart up on my screen, not right now, but maybe on Monday or something like that. And that's, in essence, where those numbers come from. So, I'm just talking about the numbers 3 and 5. If you take a look at the human body, it exists in the human body. You got 2 legs, 2 arms, and 1 head. Number 5. You take a look at your arm. Your arm is broken into 3 parts, right? You got a bicep, a tricep, and then your hand area. Mm-hmm. And then you take, how many fingers do you have? If you're born with everything, you got 5. So they exist, like you say, in things that you see, whether it's inside racing or they just exist inside so many different things in life. It's a pretty cool thing.
Yeah.
So you were asking, okay, so how do you trade these markets here?
Yeah, I was looking at the Bradley model, and I was looking at, we got 2 major turn dates according to the model I put up.
Yes.
June 12th and July 18th.
Yeah, now for some reason I had July 28th. I must have typed that in wrong then in my system.
Okay, different versions have slightly different.
Do they? Okay. And it could be July 18th. I can sometimes be a little dyslexic when I type.
But anyway, I'm looking at, where the markets, the indices have been, like on a daily chart. and we got our highs on May the 1st.
Right.
And then we got our lows, like on the daily chart, which would be a B point on May 21st.
Right.
And it looks like today we broke those lows of May 21st, so we crossed our B point. And I was wondering if possibility that our ABC down would possibly conclude on that Bradley turn date, June the 12th, and then possibly a good tradable bounce from June the 12th up to maybe July 18th.
Yeah. And so now what you're going to have to do is you've got to wait for the day to play out, though.
Exactly.
In order to be able to see if the ABCD is actually setting up. And if we just simply go over to the, if we go over to the ETFs and take a look at it right now, I'm just going to go to one of the weak guys out there. And so the B point would be, or a swing point at least, that the small caps are taking out. The IWM, the low there is, what's that? 74.41, yep.
Right. From
May 24th. Yeah, you're trading at 74.70 right now, and you're trading back inside that area.
Okay.
So that's just on the small caps. Now, the volume on the 21st happened to be 61 million shares. In the first 45 minutes of trading, you've done 16 million shares. So it's got volume, but we know a lot of that volume, came into the opening.
Right.
So that's just on the IWM. Let's take a look at all four of them while you're on the line. So let's take a look at the SPYs out there. The SPYs are taking on the swing point from May 18th. That's when it put in its low out there. That low is 129.55. You're trading below it right now. You're trading at 129.32. So where that closes today is going to be important. Volume-wise, you did 319 million. Today you've got some nice volume in it already, 60 million in it during the first, hour of, no, we haven't even traded for an hour yet. It's only been 45 minutes.
Right.
I was reading the clock wrong. So you got certainly some volume in there. And so where the SPYs close will determine whether or not the AB equals CD pattern. Now, if you close underneath on the SPYs, 129.55 with more than 320 million shares, and you've gapped down into it, I guarantee you've just set up an A to B equals CD down. And it's a real dangerous one. And what I mean by dangerous one, it's real dangerous if people are in a buy and hold strategy, or people don't use stops, because where this one will take it to in just like we were talking about, it took 4 months for price to move up. It took 30 days, calendar days, for price to move all the way back down. Mm-hmm. And so what this will do is this will move down in a very rapid pace on the SPYs down to 118.51 area. 120 happens to be the December 19th low, but it'll get all the way down to November 25th in a heartbeat. So that's on the SPYs. Let's take a look at the diamonds, because you were talking about the Dow. So if we take a look at the diamonds, as you pointed out, the May 23rd area, which would be 122.82, that is the low there. 8.5 million shares. You're trading below that right now. Hasn't even made it all the way back up to touch that area. So we got carried away talking about racing. You want to stay on the line? You want to stay on the line, Mike?
Yes, sir.
Okay, because we can talk about some new moons, full moons, and some other things out there. 877-927-6648. Steve Rhodes and Mike from Daytona Beach, my co-host. We'll be right back. Full moon, whether it's some other aspect, maybe apogee, perigee, whatever it might be playing. I like to take a look at all of those things as potential fuses or triggers. You ever see the movie Pirates of the Caribbean?
Not in its entirety.
Okay, there's a phrase from there that I like to use, and that phrase is, and especially when I take a look at all these other astro aspects that are out there, they're just guidelines. So it's not something that's written in stone. And since it's really just a guideline, what you want to do is you want to allow the market to go ahead and take you out of the market. I wouldn't close out a trade just simply because of coming into, a Bradley date. Because on those Bradley dates, on those turns, what it doesn't give you the value associated with that turn.
Right, and I use the Bradley model just as another indicator. It's like looking at the dashboard. You have a tachometer, you have an oil temperature, you have water temperature, and oil pressure, and it's just like another gauge that I look at to make sure that
Yeah, absolutely, absolutely. So one of those gauges, then one of those other indicators or tools, if you haven't tried it, go to the homepage of TFNN.com. In the carousel, you will see position size calculator. Go ahead and download that. You can use that for 30 days. There's also a video that goes with it. The most important aspect of that, well, there's a number of important aspects of that tool, but the one that I want you to be able to take a look at is always being able to understand what the average daily true range is. Because every stock, every equity, everything has an average daily range, which is nothing more than the normal noise. Now, what I use is the last 10 trading sessions to come up with a good average, but I don't do anything average, and so I always take that number, in this case here, the TWM, the average daily range, which is going to change after today for sure, but it's 1.23. It's $1.23. I like that 123. And what I like to do is I like to multiply that times a Fibonacci expansion number, either 1.272 or 1.618. In a trade here where you're looking at an intermediate term time frame, I would be using the 1.618 for sure. And what I would be doing is I would be adjusting my stop. So I would have a trailing stop. When you get into that Bradley date, what I would do is I would have a trailing stop, at whatever the average true range is, times my stop multiplication factor and set that higher. And if the market comes up there and takes it out, that's okay. And I gave back some of my profit, but I didn't take myself out of the market. I let the market take me out. And that way, if the market continues to move down, you're still in a great intermediate term trade.
Okay.
I mean, that's one of the, and what you're always then doing, and you can do this, because, as a race car driver, you're taught to continuously look at all of the gauges and make a different decision if you need to.
Absolutely. And that's one of the things I was saying that, when I got involved in this, comparing it, you have to have an open mind and you have to realize that things change.
Absolutely.
Stock conditions change and things in the markets change.
That's right.
And you have to be able to adapt.
Yeah, and that is the absolute best frame of mind that you could have, not for just the stock market, not for just driving cars, but just for living life. And I congratulate you on that.
Thank you.
You bet. All right, we are going to break. It was great to talk to you. When we come back, we're going to go to our man, our Nadex expert, Daryl Martin. Mike, have a great weekend, and I'll look forward to talking to you again soon. We'll be right back, folks.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission. And
this segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Sorry for some of these technical difficulties that we are having here today, and thanks for being so patient with us. Right now, you got the Dow off 205 points, down 1.6%. S&P's off 24 points. Composite off 56. Small caps off about 16 points. And as we do on Fridays, we're going to our expert, Mr. Daryl Martin. We're going all the way to Texas. Daryl, thanks for calling in.
Oh, thanks for having me.
Whoa. Sorry, we're having a couple of technical problems here, and that almost blew out my eardrums. Okay. So, quite a move in gold right now. You got gold trading up $50, up 3%, trade into its, looks like trade into its 50-day moving average there. Anyways, so tell me about, tell the folks about Nadex, the Nadex platform. I don't have it here on my screen, but tell the folks about Nadex platform. And folks, if you go to the homepage of TFNN.com right now, you can click on the Nadex button, and you can get a free trial of the service. They'll put a nice chunk of funny money into your account, and you can learn to trade using the Nadex platform. What are you looking at as far as trades out there right now?
I've been looking at gold. I've been looking at the S&P.
Yeah.
And basically just a quick summary on Nadex, what you can do and some things that, just trade setups at this very moment, is you can hop on and they have basically what they call bull spreads. They call them box spreads.
Yeah.
And really, if you just envision a box in your head, okay, just a quick summary for anybody who hadn't heard about this.
Yes.
On the right side of the box, you got the expiration. Okay, so that's when the trade, basically when you get out of the trade or when it expires.
Yes.
And they'll trade as late as 4:15 Eastern. Okay.
Right.
You can start as early as like 6 or 7 in the evening. So there's a lot of trades throughout the day.
And you can trade a number of different vehicles. You can trade foreign indexes. You can trade the DAX if you want.
Exactly.
Right.
DAX has been nearly 3% last night.
Right.
So, and so you got all these things going on. But yeah, you can trade all the major U.S. indices, S&P, things you've been talking about this morning. The Dow, the Russell, NASDAQ 100. You can go in. You can trade gold, copper, silver. Even corn and soybeans. So
yes.
There's a huge variety of different markets you can trade. So whether you're an ETF trader or a futures trader or a forex trader, really, it's a great product for you. And the big thing about it is that it allows you to limit your risk, get massive leverage, use really effective leverage, and still be able to profit in the markets in just a great way. One of the examples is we're talking about the right side of the box is the expiration, the left side say where you get in.
Yes.
Okay?
Yes.
And then there's the top of the box. And that's called the ceiling, and the bottom is called the floor. So let's say on the we'll talk about the S&P.
Okay.
It basically dropped down. It flew right back up, right, this morning.
Yes.
And then it's been falling back down. Almost had a little bit of a, what you could call an intraday double top or triple top there.
Yeah.
And then
you're using what time frame charts when you're taking a look at it?
I am on, I want to say I'm on 5 minutes right now.
5 minute charts, okay. So I'm going to go ahead and put the 5 minute chart up on the screen for the folks. Just simply, so we're taking a look at the...
I had the 1 minute on or double top, basically you're going to see that on the 5 minutes. Sort of a little intraday, you could call it that, double top. I'm not you're the chart man, and you know those bars and those patterns like crazy.
Yeah, I got to change this. I'm going to switch over to a 10 minute chart here, so I don't have to mess with this other thing. But that's okay. Great. Okay, so go ahead.
Right around 8:30, it came up, it dropped back down, it popped back up right around 9 o'clock, came back down.
Yeah.
And what you could have done is you could have went in and you could have sold the U.S. 500. That's the Nadex spread that mirrors the S&P futures.
Okay.
E-mini futures.
Okay.
You could have went in and sold a 1290 to 1280 spread.
Yes.
Okay?
Yep.
And you could have sold it for a price of, I'm literally looking at the charts at 1288.
Okay.
So you're talking a 2-point risk. All right. So if you did 5 of them, it take 5 of them to equal the same, dollar for dollar, point for point move.
As one ES mini contract, right?
Exactly. So 5 would be like $50 per point.
Yeah.
So you're talking a $100 risk with an $800 profit potential on the trade.
And the $800 profit potential would be with the S&P closing at 415 at what price? The ES Mini.
This one's actually a 2-hour spread.
2-hour spread, okay.
And if it's basically that'd be if it closed at 1280 or lower.
Okay.
And you can close it as soon as you want to. Like you could close it right now if you'd have got in, you'd already made somewhere around 4 points.
Yes.
At the moment, so you'd already be up 4 points on the market, and on a 2-point risk, you're up 4 points. So you've made $200 on a $100 risk. That's all great. That sounds good. But what makes it different? The big thing that makes it different is you went and you sold at 1288. The market flew up and, hit 1295, which you could have easily done.
Yes,
right?
That's correct.
Before it fell back down. I mean, if you're trading, you probably don't want to risk 5 or 7 points on a trade. So, if you're intraday trading. Well, with this, you would have only been risking 2 points, but you'd still be in the trade. And so it goes up to 1295. You're still in it. You're down your $100.
I mean, you're in the trade. You're in the trade for those 2 hours, right?
Exactly.
Yeah.
So
no, but you can't exit. You can't.
Like I said, you can get it any time. You got it right now. I mean, it's dropping even more at this moment.
Yes. So in this case here, 12. If it trades below 1280, that's when you would have your full potential, your full $800. Your reward.
Exactly. Yeah.
Your reward.
Yeah,
okay.
1280 below 1280, and you've maxed out on your profit there.
Okay. Now, can you close it? Can you close it out?
Let's say it gets to 1280.
Yes.
And you're like, man, I think this thing's just going to go. Okay. Well, you could go in and you can now flip around. This is what we were talking about at the Dallas Traders Expo.
Yes.
When me and Tommy are doing our presentation on Wednesday, and we're going to be doing a 4-hour training.
Yes.
When we do that, you can actually go in and you could go, I'm going to flip around. I'm going to go ahead and buy out. I've made my 8 points.
Right.
And now I'm going to buy, say, 5 of the 1280 to 1290 spreads.
Right.
Okay. And I'm going to sell the S&P 500 future. So if the S&P keeps falling, I get to make money.
Right.
Okay.
Right.
But if it doesn't, I have a stop loss.
Right.
For 1 or 2 points.
That's right.
That actually is a 10-point stop loss. So for $100, I have like a $900 hedge.
Yeah, that's pretty. That's pretty nice.
Yeah, so you can actually still do your futures and forex trades the same way you do them now.
Yeah.
But combine them with the spreads to basically give you a much larger stop loss for a smaller cost.
Yes.
And or you can just trade the spreads outright. I mean, whether you have $100 in your account or whether you have $100,000 in your account, I mean, you can literally trade these spreads.
Yeah.
So on 2 points on one contract, I mean, you're looking at a $20 risk. I mean, and by the way, your margin and your risk are always the same thing.
Right.
So you're margining on that one trade we talked about earlier where you sold at 1288. When you put $100 up, that was $100 risk, $100 margin to trade a product that is basically a $65,000 product.
Exactly.
So, your leverage is through the roof. It's better than, obviously, way better than trading the ETFs, even if you have portfolio margining on the margin side.
And folks,
even better than your standard broker, which is going to charge anywhere between $400 to $5,000 to trade one contract.
Right, and folks,
so
what Daryl,
great use of money too.
Yeah, what Daryl's talking about, folks, here. If you take a look at the trading so far today, so if we take a look at the down thrust on the ES Mini at 840, and I'm looking at a 10-minute chart. So between 8:30 and 8:40, after the jobs numbers were released, you had the ES Mini trade down from a high of 1292.50 all the way down to 1280, even Steven. And it did that during that time period with 173,000 contracts. Stops there, starts moving back up, moves up on some pretty light volume up until the time frame of 940. So at 9:40 after the market opens, you have the ES Mini push up now with 177,000 contracts. It pushes up. So it pushes down with 173, pushes up with 177. What stopped it in its place was that 0.786 Fibonacci number. That's what it did. It did a retracement of 0.786 retracement going back to the other swing point high that was made at 7:30 this morning when you had the ES Mini traded at 1296. So when we take a look at having volume at the bottom, volume at the top here right now, you can see this being a real intraday chop. So, what Daryl was talking about is in this case here, you've got the market trading out at 1284. And so what you'd wait for, that low has not been tested. The 1280 has not been tested. So on the Nadex platform, and you can correct me if I'm wrong, you'd be waiting for it to get to 1280. You could go ahead and close out that trade at that stage, correct? Because you would have maximized your profit?
Exactly. Yeah.
Yeah, and
maximize your profit, and like right now, what is it, 1283.75?
Yeah, and then folks, if you come down there and you get to 1280, get just below 1280, and you do that on lighter volume, and right now there's volume that's coming back in. The retracement on the way back down here at the moment on 10-minute chart is on lighter volume. So you get down there, you test that swing point at 1280, and you can go ahead and take and at this stage here you would have booked an $800 profit. And what's the trade right now, even where things are set up if you were going to go along? Of course, is there? I guess the question is there going to be a trade to be able to go along it when price gets to 1280 all the way back up to the 1291.50 area?
Oh yeah, definitely. You just flip around and go the other direction.
Okay.
So what you were selling now, buy back. Like the one that expires here in 15 minutes.
Yes.
You can flip around. But there's one that expires in 75 minutes. The exact same strikes.
Yeah. Now, what are you using? What are you using as a tool when you're dealing with the timing issue? How is it that you're using? Because when you're going to go ahead and trade on a hourly or every couple hours here. How is it? What is it that you're using as a tool to be able to gauge that? Is there some technique that you're going to be able to share at the Traders Expo this coming Wednesday when you and Tom are up there?
Yeah, I'm actually going to show it's a very unique tool. It's going to be part of, we'll be talking about it a lot when we have the radio show launching too.
Yeah.
But it actually goes through and it scans all of the spreads at once simultaneously live, shows them all to you, puts the risk and reward on the screen, and plots the risk-reward graphs so you can easily find the right spread based on what you're looking for at that moment. If you want to go long, short, which of the markets that you want to go long or short. I can literally pull up gold, silver, copper, any of them, and it instantly shows me on the screen. So I don't even have to go through the platform. It just puts it right on the screen for me.
Oh, that's great. So, folks, that is going to be over at the Traders Expo, which is in Dallas. And so if you're in the area, that's going to be this coming Wednesday, June the 4th. Is that correct?
That's right. Yep, June
the 4th.
And it'll be 12 to 4 p.m. Central Time.
Yeah.
The Dallas Expo. And, Tommy's going to be there, and we're going to be doing a lot of great stuff, and we're going to be talking about just a variety of things throughout the expo. It's actually a 3-day expo, so
yes.
Excited to come out. There's just tons of great free training.
Yes.
And this is an exclusive 4-hour event that Nadex is putting on and hosting. And they asked us to come out and just train on their products, and basically you can meet Nadex face-to-face. You can talk to them. You can talk to us. You can see the trades. We're actually going to pull up live charts, live trades during the 4-hour event. And have some fun. Oh,
that's absolutely. Folks, you want to go ahead and check that out. Come over to the homepage at TFNN.com. You'll see all the particulars there. And, Daryl, you guys have a great time at the event on Wednesday.
That was awesome. Yeah, we'll definitely, and then I'll be talking to you next week.
That sounds great. Have a great day, Daryl. Thanks for calling in.
You too. Have a great weekend.
Bye-bye now. All right, folks. So if we go back to the markets here, let's go take a look at King Dollar, because you got the Dow down. Let's go find whether we've got things in sync, whether we've got some divergence going on out here. So I'm going to take King Dow. This is the weekly chart. Let's go take a look at the daily chart, and then let's go take a look at an intraday time frame on King Dollar. We know on the weekly chart that it was pushing into the swing point of going all the way back into August 2010. Let's go take a look at right now. You just have this little spinning top doji type candle right here. You've got the dollar index in essence almost where it opened up today. Opened at 83.13. You're trading at 80. Oh, you're opened at 83.21. You're trading at 83.13 right now. It does have volume in it. So far, you've done 38,000 contracts. That's after doing 29,000 contracts yesterday. Let's take a look, see on an intraday basis if there's any patterns here setting up. We'll go to the 10-minute chart on the U.S. dollar index. On the 10-minute chart, what you're setting up here is an AB equals CD down, folks. So that suggests that the dollar index trying to get weaker. How do I know that? Well, if you just take a look at on the 10-minute chart, going from 850 when the U.S. dollar made a high of 83.67, did that with 4,300 contracts. That's going to be our A point. Our B point is as the U.S. dollar index was pulling back into the 940 time frame, did that with 5,600 contracts. So more contracts on the way down than on the way up. Now, that's your A to B point. Your C point still has not been made. But what you can take a look at, and we'll do some retracements. Let's go, let me get rid of this. We'll come back and use the formation tool. But let's just take a look at retracements from high to low on King Dollar. And right now you can see it's traveling above the 0.382 area. That says that King Dollar wants to get up to the 83.30 area. That is the likely spot. Why? Because when we take a look at the low of the swing point from 850, when it traded up to its high during that 10-minute session, the low there is 83.26. So 83.26, 83.30, which happens to be the 0.618 retracement area, makes sense. Now, if you take a look at volume here, I'll just simply draw the line. What you can see, and this is, understanding quality volume. When you take a look at the volume, you can see volume sort of dropping off here. We've got 2 minutes to go into the next 10-minute bar. Well, take a look at the volume. We've had price move up a little bit, but so far 778 contracts. What did you do in the last 10 minutes? The prior 10-minute session, 1,158. What'd you do prior to that? You did 1801. What'd you do prior to that? 2609. See, volume is dropping off as price is moving up. That, folks, is setting up the C point. So when the C point, I'm going to say right now, is going to come in right around that 83.30 level, you'll see an A to B equals CD. Setting up here that will take on the 10-minute chart, should take King Dollar down to around the 82.38 range. That's also another tool that you would use whether you're an intraday trader because of the correlation that exists with inside the U.S. dollar index and our markets here. So what we're seeing here on the intraday basis, and we're seeing from a volume standpoint, this is suggesting that King Dollar on an intraday basis making an A to B equals CD down. Let's go see if the currency of the euro supports that as well. And if we pull up the euro-US dollar chart, the euro pulling back as well, in fact, making an ABC. The euro on the 5-minute chart is in the process of making a Gartley buy pattern. When we come back, we'll go take a look at that. That looks like that is going to be completing right around the price point of 1.23604. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Got the Dow off 206, the S&P's off 24, and a serious day in the marketplace for sure. So I want to give you some very particular, very specific elements for you to be able to take a look at if you are trading the ETFs or you use the ETFs to base your trades on, and then we'll go to Mark in Massachusetts. So let me give you the diamonds here first. The diamonds, if you get a close below 112.82, that's a swing point that's out there. On the diamonds, you get a close below 122.82 on more than 8.5 million shares, and it certainly has the juice in it today. That sets up and confirms an A to B equals CD. That'll take the diamonds down to the 115.60, but more likely 112.78 area. That's on the diamonds. On the Qs, now the Qs have not been able to break the swing point. What they would have to do is they would have to close below 60.76 with more than 79 million shares. They close below 60.76 with more than 79 million shares. That sets up a confirmed A to B equals CD. That will take you to the 56.31 or 54.45 area. The SPYs. On the SPYs, the swing point that you're looking at is 129.55. If the SPYs close below 129.55 on more than 319 million shares, that confirms an AB equals CD down to the 121.85 or the 118.55 price point. These small caps, this IWM, folks, if you get a close below 74.41 on more than 61 million shares, that is going to set up and confirm an AB equals CD down to 69.35 or 67.04. If you are long this market, make sure you have stops in place. If you are long this market and you don't have stops in place, Pay attention to those ETFs, especially as you're coming into about the 345 time frame. And folks, use those because those would be confirmed if you get those. If you get all four of those, and the market is synergized. Everything is correlating. Then, folks, there is no reason for you to be risking your hard-earned capital. Let's go to Mark in Massachusetts. Mark, thanks for calling. Thanks for holding.
Hi, happy Friday.
Thank you.
Got a quick question. Tom has been talking about a bounce, and he always goes boing. My question, Steve, and this, I guess, is a follow-up question to what you had at the end of your show, which you carried over to the top of this show.
Yes.
Do you foresee a bounce? I know Tom had made a reference in the Dow. I forget what he said in the S&P, but he made a reference to the Dow of bouncing to 12,710.
Yeah.
Do you foresee that bounce happening, and particularly in the light of all the yucky news that came out today?
Well, what I have to see first is how the day closes, and because I know, and I just gave the easy thing on the ETF structures for folks to follow. You get closes below those swing points. You can throw the bounce bounced out of the window. So that's for sure. Now, what I will tell you this, and it just goes back to my first caller, Mike from Daytona Beach, that what we are coming into is we're coming into a number of lunar or celestial aspects. We're coming into a full moon with a lunar eclipse. Typically, in a bear market, you buy the full moon. So this is going to be an important low that's put out there. There's another aspect that my subscribers know of, that another lunar aspect that going all the way back to April of 2011 has acted as a low. That comes in on June the 4th as well. So that is a possibility of, it's going to be an important point that's coming into the market. You got the moon at perigee, when the moon is closest to us. I think that is on Sunday. Monday morning at about 6 o'clock is when you've got the full moon out there. So, the possibilities are out here. However, all those possibilities you can pretty much throw out the window. You get closes below those swing points that I gave you, Mark. Don't be looking for a bounce. Looking for an A, B, C, D down that's confirmed, okay?
All right, buddy. You have a great weekend.
Okay, you too. Folks, Stay tuned. Basil Chapman will be up. Then we go to Nico DeHaan. Then on Fridays back here with David White, and then the Tom O'Brien Show from 4 to 6. Have a great weekend, folks. Look forward to seeing you on Monday.